Good morning, Bitcoiners, and welcome back to your economic calendar, the news and analysis you need for the week ahead in Bitcoin. Today is Monday, July 19th, and we have a pretty active morning in the markets and a pretty jammed episode as well. So let's get to it. In today's show, we're going to start by talking about bond yields in the US. Why are bond yields dropping as inflation is grinding higher? We're going to dive deep into that and find some clues as to who's buying bonds right now. The second one is we're going to be checking in on Tether and stablecoins and what's been moving, what's been shaking out essentially in that part of the world with some interesting trends that we're seeing. And lastly, we're going to look at some signs of excess in the altcoin market by taking a look at Dogecoin, who has not yet capitulated. And we're going to look at some clues as to what we can expect and how that could impact prices for Bitcoin and crypto in general in the coming weeks. So, as always, it's going to be a great one. Grab your coffees. Starting as we usually do with Bitcoin, we see here that Bitcoin closed last week down 7.24% at closing the week at $31,776. We see that this close was actually the lowest weekly close for Bitcoin since the week of basically December 21st, 2020, which was, again, pretty long time ago. This would be essentially the lowest weekly close for Bitcoin in the year 2021. Having said that, the current price of Bitcoin at around $31,000, this is as of yesterday evening, still represents a 10% increase year to date. So again, based on everything that, even with the price action that we're seeing right now, it's still clear that Bitcoin is up around 10% in price terms year to date. And for context, gold is approximately down 7% year to date, and the S&P is approximately up 16% in the same period. So that's just a quick check in context for where Bitcoin is relative to the S&P and to gold so far this year. A quick check in on the GBTC trade. So the number of Bitcoin that GBTC holds actually did not change over the last week. It remained at around 651,000 Bitcoin throughout the week. And looking at the futures curves, this top here just shows the assets on platform that GBTC has. So this is the GBTC holdings. You see they're all relatively flat. And here, this is the actual inflows and outflows to the fund. We've seen, again, pretty light week with very light outflows. Nothing material in terms of affecting price or Bitcoin itself. We're not really seeing a massive impact on this front. Looking at the futures curves for Bitcoin, I'm just going to find them here, 1 second. So looking at the futures curves here for Bitcoin, again, we're starting to see that backwardation is actually remaining. And now we're seeing some backwardation into the September contracts, which were typically trading at a contango as relatively as recently as last week. So we're starting to see some of that backwardation remain in the curve and essentially now become extended into September. So interesting to look at. And whereas last week we were seeing that a lot of them were in contango, we're seeing actually that most of them are flat into October, if not showing backwardation this morning. So it seems to be a bit of a change in sentiment right there for the futures curve in Bitcoin. Now, just to switch gears for a second, Bitcoin generally tracks inflation expectations. We've covered that here at length. And it has been correlated with the yield on the 10-year treasury note so far in 2021. That's the chart that we've shown a couple of times here on the Bitcoin economic calendar. But here is, again, the 10-year yield, which, again, is down pretty significantly this morning. So even in the face of June, so again, just to step back for a second, Bitcoin tracks inflation expectations. Last week, we got the inflation reading for June, and the inflation reading for June came up above 5%, above estimates and expectations. And as we are seeing here, the yield on the 10-year note is dropping as inflation seemingly is soaring. So again, last week yield curve, or the yield on the 10-year was down 4.3%. This morning, it's down 9.47% again. And this is in the face of rising inflation. So yields yields in bonds drop because buyers are bidding up the price of that bond, therefore reducing the implied interest that that bond pays out to the holder at maturity. So the real question we need to be asking ourselves right now is, who is buying treasury bonds at these levels and why? Now, the chart that I'm about to show you, which was courtesy of Tyler Neville, shows that, and again, I just want to put it here behind my screen. This chart right here compares the net issuance of treasury bonds, which is the green curve, and the Federal Reserve Treasury purchases, which is the red curve. So as you can see here, the Fed has been roughly purchasing as many bonds as the Treasury has been issuing, sometimes even more, as you can see on this arrow. So in other words, the Fed has been essentially buying all of, or if not all, most of the Treasury bonds that the Treasury has offered. And doing this keeps interest rates low and signals to the market that investors agree with the Fed's view of transitory inflation. Now, what does this mean? It means that the real inflation pressures in the market are likely still at play, and that Treasury yields could be much higher if the Fed was not intervening and making purchases. As some of the headlines that you can see still show, again, look at this headline in your screen right now, which says that major deals trigger Palm Beach median sales price to double in the second quarter. So the median sales price of a house in Palm Beach doubled from Q1 to Q2 2021. So these types of headlines still show you that, or signal that, price inflation is still alive and well in the United States. So how does this affect Bitcoin? Well, we've covered here that Bitcoin tracks inflation expectations and that the Fed is doing everything it can to keep those inflation expectations at bay. It is doing so by tactically participating in the market and keeping a consistent narrative. While all of this should be putting upward pressure on Bitcoin, we do have some market dynamics that are also keeping that at bay. So there are some headwinds for Bitcoin outside of what's happening in the macro environment. One of these is the crackdown that we're seeing in China. And again, I'm going to pop that headline up. But again, this headline that came out throughout the week just said that crypto trading volumes have dropped 43% in June after China has now been cracking down on the industry itself. Now, in addition to that, we have the ongoing scrutiny on Tether, which we will be detailing at length in our What's Ahead section. And last but certainly not least, there are still some signs of excesses in the market and some assets that are yet to capitulate. A great example of this is Dogecoin. We're going to be breaking that down in our DeFi section today. But again, you can see very clearly that Doge has essentially peaked, and we're going to be analyzing this very shortly in our DeFi section. So these forces are netting out to negative price pressures on Bitcoin as we're seeing this morning, and that may continue for the remaining months of summer. Moving on to the S&P 500, we see that last week was the first down week in the S&P after booking 3 consecutive all-time highs in the previous weeks. Now, the drop, and we're seeing a pretty big continuation of that drop today, the drop last week came on the back of higher than expected consumer price index readings for June, and there were also earnings reports from several of the major banks, and we're going to get into that in a second. So here's the headline in the back of your screen, basically outlining the earnings from the banks. And as per the headline that you have behind your screen, most banks beat expectations. However, if you look under the hood at some of their numbers, there are some signs of concern. The first one is several of them reported lower revenue in very important lines of business. And that was the case for Goldman Sachs and JP Morgan's trading revenue, as well as Wells Fargo's commercial and investment banking revenue. Now, secondly, most of these bank beats on earnings on the bottom line came from releasing provisions for future lending losses, which are one-time events, and this is non-recurring income. These are, they cannot do this again in the next quarter. So the speed of growth in banking revenue seems to be decelerating from the last quarter. Now, the week ahead is quiet from a Federal Reserve standpoint. However, there is some important economic data and some important corporate earnings that we will cover in our What's Ahead section. Moving over to gold, we see that it was a pretty flat week for gold, ending the week 16 basis points higher at $1,810 per ounce. Now, the price action is interesting as treasury yields, as we saw, had a significant drop during the same period. And the yield on the 10-year note, as we saw, was down 4.13% after that June CPI read. Let's just show one more time where the yield on the 10-year note is. If you can see, it's accelerating pretty fast to the downside. But again, we saw that the yield on the 10-year note compressed, inflation grinded higher, and we see gold ended up flat for the week. Now, some of the narrative behind the reaction in yield prices is that essentially, so I guess to kind of break down why the market is reacting this way to this CPI read, the reason the market did not react more strongly to this CPI read, and again, we're seeing yields sell off, which is really strange in the face of really high inflation. But the narrative that's being kind of spun around this release or these June numbers is that most of the increase in the consumer price index was attributed to used car vehicle sales in the United States. Now, these are considered to be a supply chain constraint and expected to blow over like the melt up and meltdown in lumber prices. So again, for those of you who are unfamiliar with the melt up and meltdown in lumber prices, we can see basically that here that lumber prices went from around $500 to close to $1,800 per contract, down to $500 per contract again. So again, melt up, melt down, and this is what the Fed kind of refers to when it talks about transitory inflation, is that these glitches eventually kind of get digested by the market and they come back down to normality. Now, having said that, there are some very experienced investors that are essentially calling out some different views. One such view, which was very interesting, the graph behind your screen was shared by Lynn Alden last week. And basically it talks about, she's highlighting that right now we're not seeing inflation in rent terms, so rental inflation, which is a big part of the consumer price index. And she foresees that as home prices are ballooning right now, that rent prices will essentially have upward pressure and upward and consistent pressure as these rent contracts and rent agreements roll over. So this will continue to put upward pressure on the CPI readings into the fall, which she believes basically is going to have a very hard, is going to challenge this view of transitory inflation, because the CPI prints are going to be consistently high based on this long-term pressure upwards from home rates going up. So again, if this plays out in the coming months, this could be a favorable environment for gold prices, which tend to benefit when bond yields stay low, but inflation rises. So we'll see if the Fed is able to keep rates low and the CPI reads continue to churn higher. This should bode well for gold. Moving over to our DeFi analysis, we see here that last week was a rough week for the DeFi index, finishing down 17.87%. And although it was a bad week, we can see that it actually did not make a new low this year, and that it held this key support level, which is around this 6250 area. Obviously, it's broken that again this morning, and if it were to close where it is right now, I would have given up that support level. But based on last week's close, this candle still has a lot left in the week. Based on this last close, it was actually a pretty good level from a technical standpoint. Now, beyond the price action, we saw another headline around a DeFi exploit this week. This one comes from TorChain, as you can see in the headline behind your screen. Now, while not surprising, these types of attacks, do seem to be getting a bit more common. The TorChain protocol lost up to $7.6 million worth of Ethereum during an exploit. it is worth noting that these types of attacks are not necessarily common in all DeFi protocols. Typically, the newer ones that have not been battle tested are the targets, essentially, for some of these attacks. Now, as we mentioned in the beginning, we're looking at the altcoin markets for clues of excesses, and we see that some names like Dogecoin still seem like they have a lot of room to go down. First, I wanted to highlight this chart here, and impressive to say that essentially where the arrow points, this high, the local high for Dogecoin, was precisely on the day that Elon appeared on Saturday Night Live. Now, again, looking at this chart, we do see that Dogecoin still has quite a bit left to go to capitulate. It's still up over around 60% of where it was before all that hype. So all things remaining equal, we could expect Doge to continue selling off until it reaches those levels. It seems to be heading there this morning, and it is likely that it will continue its journey down to the 7-cent level, or perhaps even lower. So that will put pressure on crypto assets in general as this sort of deleveraging of excesses continues. Now, as I mentioned, it's been on a slow bleed, but there's still a long way down, and it seems to be staring at a bit of a cliff. So if and when Dogecoin capitulates, as I mentioned, it will likely put further pressure on the rest of the market. And it's just interesting to note this as the volatility seems to be picking up to the downside as this week starts. And moving over to our Bitcoin mining difficulty commentary, we see that after projecting a drop in difficulty of as low as 9% last week, hash rate started climbing back, and the negative adjustment actually only closed at negative 4.81% decrease last week. Difficulty ended up at 13.67 terahashes for this epoch. So while this may not necessarily be the low for hash rate, we are starting to see some headlines around Bitcoin mining asset relocation from China to North America. So again, we saw a pretty healthy bounce in hash rate midway through this difficulty adjustment. So this could be the bottom, and we could start seeing some hash rate coming back as miners relocate. That obviously nobody has a crystal ball to know if that was the low, but the fact that it was such a healthy bounce is a good sign. And these headlines that we're about to show you are also a good sign of what may be to come. So I'm just showing up this, going to find this headline, 1 second. So as mentioned, we're starting to see some headlines of mining asset relocations from China into North America. And this week or the headline you have was from last week behind your screen, is that BlackRock Petroleum, this is a publicly traded oil and gas exploration company based in the United States, plans to operate 1 million miners across 3 natural gas production sites in Alberta, Canada. And these miners, they say in the headline, are coming from China. And so we expect to see more of these as opportunistic investors with strategic access to low-cost power in friendly jurisdictions scoop up distressed mining assets from China. So this is all positive for Bitcoin in the long run. Now, as always, we leave you with what's ahead for the week. Before we get into the rundown of economic data and earnings for the week, we wanted to talk a little bit about some dynamics that we're seeing in the stablecoin world. Now, we're going to flip over to a chart by Messari. Just 1 second. So according to data from Messari, which you have in the back of your screen right now, the market capitalization of Tether has dropped by about $300 million since June 2nd. So in the chart behind you, the white line at 0% growth is actually Tether. And the other lines represent different stablecoins. The fuchsia line here represents GUSD. The green one is USDC. The blue one is, the green one is DAI. The blue one is USDC. And you see that essentially most stablecoins outside of True USD, which is a very small cap stablecoin, but DAI, USDC, BUSD, GUSD, basically all the other large contenders have actually had pretty healthy growth relative to Tether, who has seen 0% growth in the same period. So again, while the 300 million drop in market capitalization is a very small drop in percentage terms for Tether, in market capitalization terms, it has gone from 64.4 billion to 64.4 billion on June 2nd. It got as high as 64.5 billion on June 27th, but it's currently sitting at 64.1 billion as of July 17th. So during that same time period, we've seen USDC's market cap grow by around 16%, and the market capitalization of DAI has also grown by around 17% in the same time frame. Now, among some of the forces influencing this market dynamic are the increased regulatory crackdowns in China, which is putting pressure on Tether activity as well, and could be impacting Bitcoin prices, frankly. And additionally, there is an increasing amount of scrutiny around Tether in financial media. So this is one such article that came out from the Financial Times. There was also another one right here that you can see from CNBC. And again, both of these, why Tether has why Tether has economists concerned, etc. Both the Financial Times headline and the CNBC headline, they printed headlines basically highlighting its questionable reserve disclosures that we're seeing at Tether. Now, this has put Tether's dominance relative to other stablecoin contenders at an all-time low. And again, in here we can see Tether's share of the total stablecoin market, which is sitting at around 57%. Keep in mind, Tether was essentially, not too long ago, the only massive stablecoin or the only major stablecoin. It's gone from basically 100% of market dominance to around just over 50% right now. Now, if this current trend keeps up, Tether could represent less than 50% of the total stablecoin market capitalization in the coming months. Now, we're going to pause here from Tether and go back to what we have coming for the week. Now, it is a quiet week at the Fed level, and they are preparing, and the reason it's quiet is because they're preparing for July 27th Federal Open Market Committee meeting. Now, on the economic front, we do get a temperature check in the U.S. housing market this week with building permits and new housing starts on Tuesday. So let's recap all this economic data and earnings that we get this week. Tuesday at 8:30 a.m., we get building permits and new housing starts in the United States. Expectations are for an increase of 1.6 million in the new housing start or building permits. The market may cheer a lower number, as it means that the Fed may need to keep lower rates for longer to incentivize building activity. Now, again, building activity is a great engine of labor openings, which the Fed desperately needs to get the unemployment rate to its target levels of about 4.4%. Also on Tuesday, Netflix and Interactive Brokers report earnings before the bell. On Wednesday, NASDAQ reports earnings, and it'll be interesting to see if investors draw any parallels between the trading activity in the NASDAQ and what we may be getting from Coinbase. On Thursday, Twitter reports earnings before the bell, and we also get initial jobless claims and existing home sales this Thursday. Look for the market to cheer a number below 5.93 million existing home sales and a number above 348,000 initial jobless claims. Again, market could cheer number below the targets for housing because it means the Fed needs to keep rates low to keep more housing. The market might cheer numbers that are higher for unemployment because, again, it may mean the Fed has to keep rates longer to keep driving that unemployment rate lower. So on Friday, lastly, we get American Express reporting earnings before the bell. And again, as always with Bitcoin and earnings season, there's always the wild card chance that some of these reporting entities are going to disclose an allocation to Bitcoin. So again, that's always in the back of every Bitcoiner's minds as earnings cycles now heat up. So we've covered a lot. It is a big week coming up. And as always, we'll keep you posted on all relevant events throughout the week through our social media accounts and right here through the economic calendar. If you enjoyed today's show, if you learned something, I welcome you to like the show, subscribe it, share it with your friends. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning up to 9.5% on your USDC and up to 6.1% on your Bitcoins We also have market leading rates for our Bitcoin backed loans. So check us out. And we also have the ability to trade between your Bitcoin and USDC in our savings accounts. So thank you, everybody. Have a wonderful week. See you next time.